What's up, traders? Welcome to the midweek update. So as always, we will go over a broad market analysis, but in this week's midweek update, we will cover some of our companies as well. There's some pretty interesting stuff happening there, and I think it's worth noting. To start off our S&P analysis, let's check out our sectors here. You'll notice that the most red on the day, down almost 3%, is going to be our energy sector, and tech, the heaviest weighted of all, is only down right around 1%. Now, what's that reason? Well, if we look up here at Tesla, of course, it was up over 10% and making up a larger portion of that XLK, and generally the tech sector as a whole. That definitely pulled things up and kept them from being quite negative, even though many of our tech companies were red on the day. So let's jump into the SPY on our daily chart here. It does look like we have a nasty red selling candle, but I want you to take a minute and just really think about where we are in terms of the balance area that we laid out in the weekly watch list. We talked about a range that looked something like this, and as long as we consolidate in here, that's generally going to be bullish for the market in the long term because we're ultimately coming off of an extreme overextension to the upside, punctuated by poor structure, right? We have a gap here, large upper wick, so generally not the best structure for a nice clean move to the upside, but again, we're still consolidating and accepting these higher prices. So if anyone's telling you that, we're going back down to revisit the lows down here at 325, it's simply not the case yet until we show clear signs of breaking down out of this balance area. Let's jump into, let's say, a 30-minute time frame to really understand the move that developed today and what we can essentially take away from that and use for our benefit coming into the Thursday session. So on today, what I want you to notice is a few key things. First of all, how did we get to where we are? On Monday, clear rejection of this area of resistance on the chart. We did point that out on the weekly watch list. We got to close above, and this is important to note here. Just remember this green candle right there. Anyways, coming into Tuesday, we could not take out the high of that candle, so a lower high was set. Wednesday, a lower high was set, and ultimately we sold off right into a key support, Tuesday's low, as well as the previous all-time high from back there, but more importantly, the first pullback area or bounce area from the large gap up when we started to fill that gap to the downside. So definitely a key area of support here. And now where did more than half of the range of today's downside action develop? Of course, once that support was broken, and the key here is one 30-minute session. So that's extreme panic to the downside. It's very emotional selling that happened in such a short period of time. Again, same thing sort of happened here. And there's a few rules that we can put into place. That way we can trade this thing safely coming into the Thursday and Friday session. So the reason I told you to remember this green candle is that this is almost the same thing, but to the upside, right? A 30-minute candle, very large and to the upside. And how we play that, which we'll cover more on market profile, is a few rules. Of course, here on this Monday spike to the upside, we rejected it by trading lower, gapping lower through the overnight, and then not even being able to take out the high of that candle. So there's a very similar set of rules we can use for this red one to the downside. But first, let's just talk about internals, see if there was any true strength to this move. Of course, our volume is telling that we were divergent most of the day. Actually, in the morning session, we were both on board here to the positive side in the NYSE and the NASDAQ when this move was happening here. Started to get divergent when the afternoon started to go sideways, and of course went red on the NYSE here. But what you'll notice is that this isn't really a strong read to the downside. On this really strong selling activity, you would generally expect to see something like -5 to 1, -7, -10, -12. Those are really strong reads to the downside, and we simply didn't see that. Next up, coming into our advanced decliners, of course, again, sideways and choppy right into lunch, getting a little bit more aggressive to the downside here. One key thing that you can take away from internals, and this video anyways, is that when you come into the zero line, you can generally expect some sort of responsive trade in the S&P. And now, why is that? And if you think about this logically for a minute, if you think about what does it mean to be crossing that zero line, it means that all of these stocks on the S&P that are starting to go negative are going to have to cross through their opening print, which generally acts as some point of support, right? If you're coming from the top down, or in the case of the bottom up, a point of resistance. So always remember that when you're watching the advanced decliners. Anyways, in terms of the tick, this is, again, a key takeaway here is look at all these -800, 1,000, even below the 1,000 mark ticks. Whereas on the upside in the grind higher this morning, we weren't even able to come into that 800 mark positive. So definitely was some strong action, very emotional action, right? That means that a lot of stocks were ticking down. People were just panicking out of that position. Almost all of them were ticking down at one point in time, when we come back down here into the extremes at negative 1200. And let's talk about market profile and those rules to actually trade this spike before we get into some futures levels. So on the profile software, you'll notice that we're left with this M period that extends way down to the downside. First thing I want you to take away from this profile view is, where's the point of control? Point of control was left way up here, meaning that the fairest price to do business today, even though we had a nasty red candle, was actually way up here at 36.1225. Whenever you see that happen, and there is a massive spike to the downside or some selling action in the afternoon, or invert that for a lot of buying towards the end of the day, generally you can buy some futures towards the close, hold them into the overnight, expecting that we should retrace some of that back up towards our point of control. So there's a trade idea for you if you ever see this happen in the future. But how do we actually play the spike? I know I said that a few times. Let's actually talk about it now. So the spike has a few rules. If we open above the spike, so if that point of control does act as a magnet and pull prices back up, that will negate all of the selling that happened here, meaning that anyone who was short down here should be closing their positions. If they're in any sense a good trader, they should be stopping out. And we might see a short squeeze into the highs of this 3-day balance that we've been trading in, aka the high of Monday, up here around the 36.2650 mark. If we open in the spike, then generally what we expect, so if we open between this range here, is we expect responsive trade as price explores this price and tries to either get acceptance or rejection, in which case, first expect the responsive trade, but at some point we either need to come out of it and come back into our 3-day balance from up here, or break down below it and come down here. So monitor internals to be strong on the break if we open inside of the spike. And the third scenario, of course, is a bearish scenario, in which case we open below the spike, where we're now confirming that all of these sellers up here were correct. They no longer have to panic out of their position if we open higher than the spike, right? Think about this psychologically. Therefore, they're still getting paid. They have no reason to exit their short, and I imagine more shorts would come in as they start to see prices move lower. So, main takeaways, if we gap up into the spike, or not really a true gap, but if we move into the spike, watch for responsive trade here. If we open above the spike, watch out for the potential rally to come into our 3-day balance highs, which are generally, I know I called them way up here at Monday's high, but look for basically here, the 36.20 mark. That's really ultimately the high of this balance area, right? If we take an average of the high of the balance here, here, and here, it's probably actually a little bit lower in there, but you get the point, right? We're generally going to move back up towards these higher points of control. So that's hopefully something you can take away and use whenever you start to see a spike like this develop in the future. Let's go ahead and move back into our charts and talk about the Qs real quick. We'll flip it back over. And what I want you to notice here is, of course, on the 30-minute time frame. Let's actually go to the daily. Let's just blow through this pretty quick. I don't want this video to be too long. There was a lot of learning involved in that market profile as well as the internals there. But here on the Qs, getting rejected back below our resistance trend line. So tech is a little bit weak, right? And it looks like, if we do see that continuation of selling to the downside, our next target's going to be here at the 287.28. Anything underneath that, and of course, look out for this. And the 50 SMA, right? That's going to slowly creep up since prices are still trading above them at the 282. That'll definitely be a super support if we get down into it on any sort of extreme selling this week. If it gets there this week, definitely watch out for a super support bounce. That'll be pretty aggressive overextension to the downside. You should get a small pop out of that. Moving on to IWM, what you'll notice is that it's much stronger, right? We talked about in the weekly watch list how this was the most bullish of all of our indexes. And we did get that gap up on Monday, and we did move higher. And now we're currently trading, above the 50% range of the gap up here. So still maintaining all of the bullishness here in the small caps. I would watch out for either a move over this 2-day balance, so over today's high, or underneath Tuesday's low, to come back down and either retest the low end of this balance ultimately. I know it's a lot of balances, but if we break down below Tuesday's low, watch for a longer time frame move down into the 169. But if we take out the highs, again, just monitor for continuation in the upside direction because small caps are definitely on fire. And really quickly to go through our main companies, what I want to point out here is the fact that the market has been in a really indecisive period over the past week or so, right? If we look at these 5 trading days, where has the market gone? Essentially nowhere. And just now with the S&P breaking down, we're starting to see a little bit of momentum develop to the downside. So if the spike rules play out as they should, if we do see an opening below the spike tomorrow in the S&P, I'm looking to get short, play some intraday scalps to the downside here in Apple. This is a key one with a breakdown point right there. If we come over to Netflix, this one has been absolutely killing me. If you ask anyone in the Discord, I've really been waiting for this one to break down. Look at this flush point here. Absolutely unbelievable. So again, if the spike does accept prices lower or reject prices and continue lower rather, then definitely looking out for a flush down into this 467. Same thing on Alibaba. Actually, Alibaba is different, and I was going to save that and Tesla for last, but since we're here, let's just cover it. Look at how overextended this move is here on Alibaba. So again, the way this is different is we've already seen the downside action in BABA, and we actually printed a hammer candle here, and that would generally imply that the buyers are starting to step up at a key support, right, 253.81. Generally, especially look at this huge gap above us, I'm going to start to look for a dead cat bounce, aka upsided trades, positive trades, targeting this 265.69 area for a little bit of a back test. Coming into Facebook now, same exact thing as the balance on Apple, essentially, right? We have a number of days just trading sideways, and just now with the selling activity starting to break down lower, we'll skip NVIDIA. They have earnings tonight. And come into Microsoft. So they already went, and I missed them today. I will completely be the first one to admit that. I was watching Apple, and Microsoft just went, and I didn't want to chase it. So again, a little balance here. It looks like we already doubled our range to the downside. So I'd be watching for, if the market continues lower, watch out for Microsoft to maybe lag a little bit just because it is at a super support. I'd really be watching Facebook or Apple for that downside continuation at this point. And Amazon, let's check them out. Again, really not much happening here in Amazon. One thing I do want to make your attention to is this trend line here coming into it. If it breaks, look for filling up that triangle into the end of the week, coming into this low at 30.18. So last but not least, let's talk about Tesla briefly and its inclusion in the S&P 500. There's not a whole lot to talk about here, even though it may seem like there is, right? So even though they are getting included in the S&P 500, all that means is that many funds are going to have to buy this to include it into their portfolio, right? It's going to have to get added across a number of different, multi-billion, if not trillion-dollar hedge funds, and that means people are going to have to be buying Tesla. So I'm not sure if that's what we're starting to see here, or if this is just the speculation. Do know that the add date is on December 21st, so that should be interesting, seeing whether or not we get some fireworks coming into that date. But right now, upside target, of course, all-time high at 502.50. Anything above, blue sky territories, whole dollars, $5, $10, $25 marks here on Tesla. To the downside, though, let's break it down into like a 30-minute chart one more time for a little bit of microscopic analysis, if you will. And what you'll notice is that we just had a day of complete rippage to the upside. We have to keep zooming in here for our support. But the key one that I definitely want you to have on your chart is going to be this area right here. Let me get the drawing tool and slap it on there. It's going to be right here at 483.34, almost where we pulled back into directly on the sell action in the S&Ps and towards the end of the day across the broad market. If that one gives, essentially watch for Tesla to come back down, maybe consolidate into an inside bar in this massive range that we had today. But if we can take out those highs, look for a quick pop to the all-time high, and then you're going to have to monitor it very closely as we head into blue sky territories. It has been consolidating for quite some time on the daily time frame, right? We've talked about this symmetrical triangle for a number of weeks, really, and we're now starting to see that strong confirmation break to the outside. This could, over the long run, potentially go much higher, but definitely through the end of the week, monitor it very closely if we do decide to come up into those all-time highs. So that's going to be it for this week's episode of the Midweek Market Update. If you enjoyed the video or learned anything new, leave me a comment down below letting me know what you learned, or just simply give the video a thumbs up. With that, I wish everyone a green trading week.